This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices were little changed in Asian trading on Tuesday as investors took stock of President Donald Trump's plans to apply new tariffs later than expected while boosting oil and gas production in the U.S. The most actively traded West Texas Intermediate crude March contract dipped 60 cents, or 0.78%, to $76.79 a barrel. There was no settlement in the U.S. market on Monday due to a public holiday. The February contract expires on Tuesday. There are a lot of moving parts for markets to digest this morning, driven largely by headlines, which is a hallmark of a Trump 2.0 era, said Yip Junrong, market strategist at IG.
Global natural gas markets will remain tight this year as demand rises and output grows more slowly than before the energy crisis of 2022 and the pandemic of 2020-2021, a quarterly report by the International Energy Agency, IEA, said on Tuesday. Gas price volatility has been stoked by political factors, including uncertainty around the energy policies of U.S. President Donald Trump and the potential for disruption of Middle Eastern supplies. Although the stoppage of Russian pipeline supplies to Eastern Europe via Ukraine on January 1 has yet to lead to a shortfall for the European Union, cold weather means Europe is set to end the winter season with below-average gas stocks, increasing demand for global liquefied natural gas.
Moving on to the top news in the energy sector.
President Donald Trump on Monday laid out a sweeping plan to maximize oil and gas production, including by declaring a national energy emergency to speed permitting, rolling back environmental protections, and withdrawing the U.S. from an international pact to fight climate change. The moves signal a dramatic U-turn in Washington's energy policy after former President Joe Biden sought for 4 years to encourage a transition away from fossil fuels in the world's largest economy. But it remains to be seen if Trump's measures will have any impact on U.S. production, already at record levels as drillers chase high prices in the wake of sanctions on Russia after its 2022 invasion of Ukraine.
Russia's oil shipments via the Baltic Sea fell by roughly 10% in the last 4 months of 2024, the Finnish border guard said, as the impact of EU sanctions against Russian oil and gas exports adopted in June took effect. Baltic Sea nations are on alert after disruption of power cable, telecom link and gas pipelines since Russia's full-scale invasion of Ukraine in 2022, some of which has been linked to tanker activity. At the same time, Finland's Coast Guard monitors the shadow fleet that Russia uses to export oil via the Gulf of Finland. Next, we have the top news in metal market. China's December shipments of antimony products recovered for a second straight month, jumping 113% from November, customs data showed on Monday. But flows to the United States stalled after Beijing banned exports there in response to Washington's crackdown on China's chip sector. The world's largest antimony producer, accounting for 48% of global mine supply in 2023, banned exports to the United States of critical minerals including antimony used in military applications such as ammunition, infrared missiles as well as in batteries and photovoltaic equipment. This came after China imposed export limits on the critical mineral and its related elements from September 15, in order to safeguard national security and interests.
Dalian iron ore futures rose for a ninth straight session on Tuesday as U.S. President Donald Trump did not immediately impose tariffs on trading partners as previously promised. The most traded May iron ore contract on China's Dalian commodity exchange ended morning trade 0.81% higher at 806 yuan and 50 fen, $110.89, a metric ton. Earlier in the session, it touched its highest since December 12 at 808 yuan. The benchmark February iron ore on the Singapore exchange was 1.28% higher at $105.15 a ton, as of 0331 GMT.
We will now look at the top news in the agricultural sector.
Euronext wheat eased on Monday to a new 6-week low, pressured by euro strength against the dollar as investors reacted to indications Donald Trump may not immediately impose trade sanctions as incoming U.S. president. Benchmark March milling wheat on the Paris-based Euronext closed down 0.2% at €226.25, $234.76 per metric ton. It earlier touched its lowest since December 5 at €225.00, slightly below a previous 6-week low from Thursday, but found chart support around that level.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.